Yeah, I'm losing my edge.
Something that's not reasonable, Pete, is trading technology that looks a lot like Apple, and that's what NASDAQ has looked like for the last couple of years here. And I want to get into trading technology, which we've been covering all week here on Small Stakes, but take a deep dive into the components and see what the components mean to a technology index like NASDAQ and what they mean to what is, I think, the truest technology index, the newest for sure, in Small Tech 60, the STIX product from the small exchange. Because at the end of the day, Pete, if I'm going to trade technology and I'm not going directly to Apple, then why would I be trading NASDAQ or XLK, that ETF, or the NASDAQ futures or ETF, or a mess of other tech products, Pete, that are mainly focused around one or two or three stocks. So we're going to get into that in a second. But first, I just wanted to verify, this is kind of like a Rorschach test for you. Does this STIX look like NASDAQ to you? It looks pretty similar, right?
It looks pretty similar. Yep.
Yeah. Okay. So good. All right. So we can move on.
Yeah. It looks incredible. Good. I passed it.
I like this idea of we build the presentation. We got 5 slides. You can see that we have 5 to go. And it's like, all right, we're on 1 of 5. We got about 15 minutes to cover. Pete, what do you think about slide number 1?
Well, no, you asked me specifically.
Okay, move on.
Go back, because you asked me specifically, do they look alike? Absolutely. This is, you know what? Technology is what's in focus. We wanted to build an index that took NASDAQ was built, 30 years ago. We wanted to take a new look at technology, but we wanted, if you're trading Qs, you're trading NQ or MNQ, we wanted to give you a product that lived in that world, but was its own representation. So, this is what I want. And when I say what I want 2 things that have a very similar heartbeat, that have a synergy to them. It's not, we know the construction is a little bit different. So the overlap, we don't have this horrible overweight of 4 or 5 things driving a large percentage of the index. But this speaks to me about tradable opportunity here, not only directionally up and down, because we've seen some nice pullbacks, but between the pairs. It's, at the small exchange, we never said, if you trade smalls, that's it. You got to close every other exchange off.
Yeah.
And you can't trade ETFs anymore. It's smalls and. So look at this as a wonderful complement to what you're trading right now.
Yeah, for a bunch of reasons, I want to go through how these components being driven by not just one or a handful of stocks is a good complement and replacement in some cases. There's a ton of reasons for diversification of investment and for just interesting trades on a daily basis. Why I would want something that is more equal weighted than top heavy. But let's get into some number crunching here. Looking at the top 3 stocks in the NASDAQ, you got Microsoft, Apple, and Amazon, 3 stocks that come up very often, as they well should, when they account for more than 30% of a 100 stock index. And their movement here in 2020 has accounted for more than half of the NASDAQ's rally. I mean, this is just, it's not, like we always like to say, it's not wrong and it's not bad. But I just don't understand why I'm going to an index, why I'm going to this other product when it's moved 9% by just one of its 100 constituents on what has been a 30% rally. I mean, Amazon literally has accounted for a third of 2020's rally here in NASDAQ. At that point, I'm just trading Amazon. Right. You're not getting 100 names, you're getting 3 or 4. It's such like a half-assed way to go trade an index. I don't get it.
Well, and I think part of it too is that with this overweighting, you're susceptible to the ebb and flow of this stock, which is not necessarily that visible when you're trading the index. So you see these dramatic outperformances like yesterday. Russell down with NASDAQ up over 2%. S&P's barely eking out a percent gain. And it's like, well, there's something wrong here, or there's a pairs trade to be had. There's not necessarily a pairs trade to be had. It is the NASDAQ is just susceptible to this very small set of names, which makes kind of trading it back and forth, I think it makes trading it back and forth much harder.
Yeah, you're right. It's almost like this, like cloak, or it's like hiding the fact that it is driven by just a few names. And no, the people who constructed the NASDAQ aren't hiding it. But yeah, you almost see the divergences among different indices, and you're like, oh, something's out of whack. And it's like, no, it's just Amazon or Apple or Microsoft has moved a bunch. And you're right, Pete. It makes trading pairs between equities very, very difficult, because you're, in essence, when you sell NASDAQ and you buy the S&P or you buy the Russell, you're just selling mainly these three stocks and then buying a handful of stocks that are just performing slightly different.
Right.
And it's just this frustrating thing that, yeah, like I don't want to say like it's disguised, but it's almost like just these three stocks disguised as an index that has 100 names and they're all integrated into this movement, but it's really not so. This is literally half of this rally. NASDAQ's up a little over 30%, and these three stocks are up 20% between them. And it's, I don't know, for so many reasons, whether it's just investing or pairs trading or just trading the NASDAQ on its own for short-term speculation reasons, it's just not fun to trade something that is just three stocks,
Agreed.
So let's move on to what these three stocks look like in the small technology 60, the STIX product, because we didn't just go away from them. We didn't say we don't want Microsoft, Apple, or Amazon at our party. We invited them, but they only get 2 drink tickets like everybody else. And so their weighting here of 1.7% means that, yeah, they have a nice effect here on the small technology index, but they aren't accounting for over half of, almost 2/3 really, of the index's movement. They're accounting for a tenth of it. So we've got 60 names here, 3 of the big outperformers, big market cap stocks here, accounting for a tenth of it. And it makes room for stuff like this. You've got W here, Wayfair, up 270%. Moderna, which has been a biotech stock that in the news constantly for its potential for a COVID vaccine, up 260%. And then Shopify, just a retail stock that is in the technology sector that's just taken off here in 2020. And they have the same weighting. And it's this idea, Pete, and it's crazy that this may seem novel, but larger chunks of the index's movement are being contributed by larger moves from companies, and
that's a great point to when you talk about the concept of what am I trying to accomplish with an index, is I want a simple expression of opinion of a broader set of underlyings rather than trying to construct my own. And this is giving you that versus some of the other choices we have right now.
Sure. And Moderna here, mRNA, is in NASDAQ actually, but it's, I think, 0.3 of a percentage point of NASDAQ. And so no one is going in there and seeing, oh, NASDAQ's up 200 points. What's Moderna doing? But really, they should be doing that because this is a stock that's on the move. And so, some people might say, well, the reason that they market cap weight it, you idiot, is because they don't want these small stocks that are fly-by-night stocks moving this index around. But we almost did that curation when we chose the stocks. We didn't put any stocks in here that had small market capitalizations or we thought could, go from a $100 stock to a penny stock in the matter of a couple of weeks into this index. We, one, check to see that these are disruptive, technologically oriented stocks. 2, made sure that their market capitalization and trade volume showed that they were stocks that are here to stay. And then 3, we're just like, give them nearly equal weightings so that the index is being driven by the drivers. They're not being driven by the weights. I don't want to trade an index, Pete, that's being driven by the weighting methodology of the index. I want to be trading an index that is driven by the movers in the index, right?
Right. And that's a great point. to be able to get that effect of, I like that, it's a simple expression of you've really, the idea around this, that what I want to participate in what's moving, and how certain other indexes construction kind of prohibits you from doing, or masks it. You don't see that. So, we talk about sometimes selection dilemma and picking the wrong one. I have an idea about something and I picked the wrong one. Well, when you look at something that's, constructed of 40% of three things, the rest of them really aren't material to what ends up happening on that day. So whatever part of that I have an opinion on, and it could be a grouping, it could be a sub piece of that, you're not getting that trade. And that is where you have to really reevaluate. We are product indifferent, but really that doesn't mean that I accept the not flaws, let's not call it flaws, just the construction of something that doesn't fit with my opinion. So this goes back to it. I like the summary that what's moving is most reflected in terms of movement of this index is an important component about diversification, about negating the challenge around selection and selection dilemma.
Well, and it's obviously huge for diversification here, because I don't want any of my investments in the equity world to be centered around three stocks here. And thankfully they've performed well. But when you've got a mix of 15 biotechnology stocks, 15 retail technology stocks, 15 stocks that are in media that are very technologically driven, and then your information stocks like Apple and Microsoft here, you've got that mix for investment. It's great for diversity, and the equalization of those weightings there, Pete, is great for short-term movement. And I don't usually bring the platform into this show, but I want to look at these components really quickly here for the STIX product, and show that there's such a crazy mix of tech names that are constantly moving it. Here are the biggest movers today. You've got Abbott Labs. News came out that they can do a very quick COVID test that's very cost effective as well. And right next to another big mover here in technology, Snapchat, which would be more in the media realm. And then there's Square here, which is in the retail realm. And this is just so cool to me. You look at the worst performers of the today, Netflix, Adobe, and then there's that Moderna actually giving back a little bit of the huge move from this year. And it's really interesting from an investment perspective and from a what's moving today perspective. Right. Because otherwise, Pete, you go to there's even more names in NASDAQ, but I'm only going to be checking what's moving between 3 or 4 of them. There's 100 stocks there relative to our 60 in the STIX, but only 3 or 4 count.
Right. And because they're not consequential to what we're trying to accomplish with that index. So a little bit different way to construct an index in a good way. You know what? Products need to evolve. And one of the things we always felt very much at the small exchanges is when we built products, we built them with that in mind, that we have a clean slate. So let's build what iteratively is the next logical step of index creation that gives our participants the exposure to the world that we want right now, which let's not all argue about, is technology is the most interesting part of this trade right now, but gives it to you in a more, I don't know if balance is the right adjective, but gives it to you in a reflective way as to technology. Yeah. We've got 4 sectors within that, each with a unique, really user-focused in terms of a personal expression of the way we engage as traders and as individuals with technology, which is a great piece of engagement. But really what we're looking for is the performance. And that's what this structure gives us. And I think we'll continue to. This is why we're seeing growth in this product. We're seeing incredibly tight markets here and a lot of, this is an area that I don't think tech is a story that's done in a month. Tech will be a focus it always is a focus. It's the degree of focus. And I think we'll continue to see that for the foreseeable future. This becomes a powerful addition in terms of products into what you're trading.